Good morning this Thursday, the 3rd of August. I'm Grady Wolfe, a market analyst with Bell Direct. Fitch Ratings cutting the US credit rating to AA plus from AAA sparked a panic sell-off on Wall Street overnight, with the Dow Jones closing the day down almost 1%, while the S&P 500 lost 1.38% and the tech-heavy Nasdaq tumbled 2.17%. The Nasdaq had its worst day since February as the Fitch Ratings cut on the long-term foreign currency issuer default rating on the US was because of expected fiscal deterioration over the next 3 years, which was the reason cited behind the move. The last time the US was downgraded was in 2011 by Standards and Poor. Economists and analysts alike are expecting the risk-driven sell-off to be short-lived and the impact of the downgrade to be temporary, though. Norwegian Cruise Line shares fell 3% on Wednesday, a day after the company issued weaker than expected guidance for the third quarter. SolarEdge Technologies tanked 19% on Wednesday after the company reported revenue of $991 million, which fell just short of analyst expectations of $992 million, and the company also issued weaker than expected guidance for Q3 revenue. Over in Europe, markets closed lower across the region as investors digested the US credit rating downgrade alongside the release of key corporate results. The Stoxx 600 fell 1.35% on Wednesday. Germany's DAX fell 1.36%. The French CAC lost 1.26%, and in the UK, the FTSE 100 fell 1.36%. Siemens Healthcare fell just under 7% on Wednesday after the company reported a third quarter profit decline. The local index closed 1.29% lower yesterday, with every sector ending the midweek session in the red on the back of a sell-off in New York on Tuesday. Utility stocks took the biggest hit, with the sector closing down 2.19%, while REIT stocks gave up all of Tuesday's gains to close the day down just shy of 2%. The big iron ore miners also took a hit yesterday, with BHP, Rio and FMG falling 1.1%, 0.9% and 2% respectively, on a decline in the price of iron ore to $111 a tonne. Pilbara Minerals rallied yesterday after the lithium miner announced an update on the final investment decision for its midstream demonstration plant, with the board granting approval for construction of the plant to produce value-added lithium product at the Pilgangoora project. The plant will cost $105 million, $20 million of which will be funded by an Australian government grant. On the commodities front this morning, oil is trading 2.02% lower at $79.64 a barrel. Uranium is up 0.18% at $56.24 a pound. Gold is down almost 0.5% at $1,935 an ounce, and iron ore is flat at $111 a tonne. One Aussie dollar is buying 65 US cents, 93.72 Japanese yen, 51.52 British pence, and one New Zealand dollar and 8 cents. The sell-off on Wall Street is likely to impact the local market today, with the SPI futures anticipating the ASX to open Thursday's session down 0.79%. And now let's dive into some trading ideas for your consideration today. Bell Potter has increased the price target on PSC Insurance from $5.86 to $6.41 and maintain a buy rating on the diversified insurance company following the release of the company's trading update, outlining that it expects to deliver underlying EBITDA of $111 million for FY23, subject to audit and sign-off, which is well above the previously guided range. And Bell Potter has decreased the 12-month price target on Calix from $9 to $8.70 and maintain a speculative buy rating on the emerging environmental technology company, following the release of Pilbara Minerals' update on the final investment decision for the midstream demonstration plant, which signifies a key de-risking milestone as the plant is a joint venture between PLS and Calix. The FID reflects a satisfactory level of technical and economic feasibility and lithium phosphate marketing completed to date to advance the project into construction. And that's all we have time for this morning. Have a terrific Thursday, and as always, happy investing.